was fun. It was a good time. That's crazy. Yeah. How long were you there?
About 17 days.
17 days? Okay. Okay, cool. Yeah. I usually go for a month, but since we had just came back from a honeymoon, we went for 2 weeks.
Do you go there a lot?
I've been there 6 times. Yeah.
I've been there
3 times. Yeah. Yeah. It's a beautiful place. Really nice. Yeah. It's a good time.
to the islands yet, or do you go to work?
I go all over different islands usually, but Bangkok's fun. Yeah. Chiang Mai. I've been all over. Yeah. But yeah, it's good. Yeah. I'm gonna pass this along. You guys already got this for today's thing? Do you have today's thing? Do you want to turn on, or maybe Ted could send it to you?
We're recording. You're marked live.
Perfect. Thank you. You got today's thing?
Yeah.
Okay, cool. Thank you. Oh. Holly, Shane, Laura.
Order more hats because he's asking me again.
Yeah.
want to wear Lakers?
I'm like, he just finished telling me I spent too much money, so I haven't ordered hats.
He said I can. I'll order some.
You ready?
Yeah. Cardo.
And then the past
Doesn't matter what.
The stool.
Oh, yeah. No, yeah, we're good. Thank you. All right. Does everybody have this? Today's thing? Yeah? Everyone has this? Lee, you, turn on your airdrop. If you don't, now I'll pass it to you. Joelle. Oh, there goes Joelle. What's up? Welcome. She has a thing right here for so you can sign in.
How'd you meet Walter?
Let me see. I got an iPhone.
Every time I meet someone younger,
Let me see.
properties I always had.
Cool. Yeah, sure.
I just referred to the food. So he introduced me to a guy, and supposedly he didn't really do it. A week ago, a week after I introduced him, I came in, so I didn't go. Like, I haven't connected.
What's up, man? How are you? Good. About to get started. All right. Yeah.
I realized mine was on contact.
Let's see. Let's see. Are you? Oh yeah. Got it. All right, let's get started. Welcome everyone. So they gave us a phone call yesterday saying that it was going to rain. So we're just going to be in here, and we don't have a designated space. But I wanted to take it back to like the first coffee and caches that we did. The first couple of coffee and caches was very like the original intention was to get together, talk about money, learn about money a little bit. Cool. And then that way we're all kind of like growing together. It's like a community of people who want to grow and get better with money over time, you know? And, you know, over the last 2.5 years, different people have came in different ranges. We've had people that are barely starting like their money journey, don't know about money, trying to get out of debt, trying to, you know, build a little bit. And then there's people that have, there's been a couple of guys in here that have been in centimillionaires. So there's been people here anywhere from net worths of 100 million to 500 million at this coffee and cash. And I was talking to a guy, one of the largest landlords in San Diego a couple months ago, and he was telling me, oh yeah, there's this thing, you know, I never make it because it's really early, and this guy has $1 billion portfolio, and he started describing it, and I go, are you talking about like a coffee and cash? He goes, yeah, that's the name. He says, I keep, you know, wanting to go, and this guy's a billion, you know, owns $1 billion portfolio in San Diego County. So it's like there's been people really rich right in the middle at the beginning, and that's the whole point is like sometimes everyone is always trying to grow. No matter how much money you have, everyone's always trying to learn something, get better. So that's the whole point of coffee and cash. So the first couple of coffee and cashes that we did, we were just kind of sharing our ideas. It was very intimate, and it was just like, okay, like, you know, what are you up to, or what are you trying to do, right? So what I put together here was kind of like an outline of that first coffee and cash that we did. And I'm just gonna cover a couple things. I was talking to a couple financial advisors. I have 2 different financial advisors. One of them, they have probably about somewhere close to $500 million that they manage. And then the other one, they manage $2 billion. And the $2 billion guy, he's top Forbes, one of Forbes' top financial advisors. So they're really good. And so they're always putting me up on game and obviously managing some of my money. Good morning. So what I sent you guys was kind of just like an update on a couple of important, you know, assets. The first one is gold, and this is year to date. I know last time we did like the last, you know, 2026, but this is from January, or sorry, 2025 we covered last time, but this is from January to now. So gold is up 17%. And, you know, that's important because a lot of people associate the value of gold going up with the dollar going down, you know, and a lot of people think that gold and silver is like actual real money, where US dollars, good morning, US dollars, you know, it's fiat currency, which is basic currency that governments made up over time, just like any other government currency. So whenever they see gold just like on a tear, like we've seen all last year and this year, then that's something that a lot of people take notice on, you know? And we're supposed to, if we have money invested, we're supposed to take notice. So it's up 16.99% year to date, which is crazy. That's not like throughout the entire year. This is just in the last 45 days. Silver is up 14.5%, which again, it's been on a tear. It outbeat gold last year overall. And if you guys, does anyone here invest in silver or gold? Yeah, you invest in silver and gold? Yeah, anybody else? Yeah? Do you guys buy stocks or you guys buy the actual precious?
I buy the actual thing, I was gonna say.
Yeah, okay, good. So you buy the actual physical, you do too? Where do you guys go to buy it?
That spot you recommended 2 years ago.
Oh, the same spot?
Now looking back, I'm kicking myself in the ass. I should have bought a lot more. It wasn't that much 2 years ago, and all of a sudden last year, it straight tripled in silver and gold. I'm like, whoa.
So he's saying that he bought from the same guy because. So next month, by the way, the next month we're gonna have John, who owns 5 different precious metal shops. And here and in Arizona, he's coming to talk about specifically that. But he's been a guest here at Coffee and Cash, and his net worth just ballooned the last 12 months. I talked to him a week ago, and I go, hey, how does it feel to be rich? And he just started laughing because he carries most of his assets in gold and precious metal and platinum, and he's really good at that. So that's where you buy it. Where do you buy yours? Okay, cool. Silver or gold Okay, yeah. So when I first met John and started investing, the same thing. It's like, okay, like whenever tenants pay me cash, I have a bunch of tenants that pay me cash, then I would just go to the store and then just exchange it. So if you ever want to buy precious metals, that's kind of how you do it. But you have to go to a reputable dealer and then, make sure that it's legitimate gold, legitimate silver. But that's what I did for a long time. I think when silver or gold was $1,700 an ounce, that's when I started buying. And right now it's over $5,000 an ounce. So that was a nice way to, triple or quadruple my money. Same thing with silver. I was buying it at $20 an ounce, and then it went up to 120. So that's 5 to 6 times your money. So it's always really, that was the whole point of Coffee and Cash, so you could learn about different ways to store your wealth. Cool. The next one. So I put Costco. It's 12%. The reason why I put Costco is because if you guys were here, like sometime last year when I had one of my financial advisors come, and somebody asked him, hey, what's your favorite stock? And he said Costco. Well, I was talking to him yesterday, and Costco stock has gone over the last 5 years, he said, 20% on average, year over year, which is crazy, And then one of my other buddies, he's been buying Costco stock since the 1980s. So he has tens of millions, if not hundreds of millions of dollars in that company. But I put it in there just because it's a strong company that shows a lot of earnings, and I just wanted to compare it to like the rest of the market. Does anyone buy individual stocks? Like where you guys just go in and pick your individual stocks?
Like 9 years ago, like, he's still pretty cool. He's kind of taking advice from other people.
Yeah.
I don't sell them, but I just keep buying them.
Yeah. So he said 9 years ago he started E-Trade account, and he just buys individual stocks, just more for if friends recommend something, then he buys it, but he never sells. Does anyone else buy individual stocks? Yeah. Is there anything that you like?
Nike.
Huh?
Nike.
Nike?
Yeah.
Okay, Nike. You too, Nike?
Roblox is what I've been.
And Roblox? Okay.
This is more so like what's his name, Sharon or
Sandeep?
Sandeep. Was that buy the stock that you believe in or that you like,
Okay.
and it was like that for Costco. It's like everyone goes to Costco. They're expanding into China. So that was more so his recommendation, and I was like, I like Nike. I use them all the time, so I was like, all right, I might as well,
Yeah. So he said that he took recommendation from one of the financial advisors that has come here and talked, and he just said, hey, look at whatever you use a lot of, you should probably own. So the way that we teach our clients about money whenever they come in is we have something called the wealth accumulator, and on the 4th step, there's 6 steps, but on the 4th step is you put 20% of all your money ever into the S&P 500, right? So if you're earning 10 grand a month gross, then 20% you put it into S&P 500, and that's your savings account, and over time it goes up. In this case, like if you look at the S&P 500 year to date, it's only up 1.4%, but that's better than it's staying the same or negative. But over time, the S&P 500 has averaged over the last 50 years 11.95%. So 11.95% on your money, that's really good. Every investor I've met over the last 24 years that has come into the office and I go, hey, what would you be happy with? What type of return? Almost everyone says 10%. And if they're happy with 10%, like 11.95% in the stock market, that's excellent, like in the S&P 500. So anyhow, the way that we talk to clients is like this. If you have a 100% pie chart and you're putting 20% of your income every month, at first start off with the S&P 500. But once you get more, what's it called? More experienced, okay, then step 6, 2 steps later, you want to, at that point, go into 70% S&P 500 and then 30% 5 individual stocks. Okay, so for example, if you're making 10 grand a month, right, you're putting away 20% and you're saving that. That's 2 grand a month. And then 70% of that, $1,400, goes into the S&P 500 every single month. 30% of that, which is $600, goes into individual stocks. So if you like Nike, if you like Costco, if you like whatever you use, that's kind of how you split it up. So 70% is very conservative because you know basically time has proven that you're going to make 11.95%. And then the other 30%, that's more, you know, like you're taking a bigger risk because you're buying individual stocks. Yes.
So what you mean with that other one with the S&P 500? So you're pretty much, that's all broken down in the stock, so isn't it? All types of other stuff. So you're just buying into that particular.
Yeah. So. Okay. So the S&P 500, what it is you're buying into the top 500 companies in America. Okay, so the way I look at it is you're basically investing into America. You're basically saying, hey, look, I think over time, the top 500 companies' economy in America is going to continue to grow. So in essence, it's been growing. The top 500 companies have been growing 11.95% on average over the last 50 years. So when you buy S&P 500 stock, you're buying a little bit of Costco, a little bit of Walmart, a little bit of Nike, Tesla, Microsoft. Yeah. Yeah. So basically, when you buy the S&P 500, you are buying Microsoft, Nvidia. You're buying like the top 500 companies, period. So you could easily just keep, you know, keep all your money there, not buy anything else. And it grows over time. Okay, and then the last one I have on this sheet is Bitcoin. So Bitcoin, it has been a negative year to date, 23%, which has taken a big hit. You know, is anyone invested in Bitcoin? I know I am, yeah. So, you know, you win some, you lose some, but it's like it went up to 120,000, right? Over 120,000, and what was it at? Like it would drop down to 63,000, and then now it's like 70,000. So, with again that one to me, that what is that? 66,000. So she had a question. She goes, should people buy Bitcoin? If you believe in it, I think if you believe in it, right now.
What's your guys telling you? Like your.
So what he's asking, what is my financial advisors telling me? They're saying I should have a little bit of it. You know, kind of like it's almost like, hey, just in case, I'm gonna buy some, and then if it blows up, it blows up. Now, the reason why I only own a small percentage of it, I want to say I own, less than 1% or about 1% maybe of my total net worth. So this is when you get into also like net worths, right? So if you have $100,000 net worth, then 1% would be $1,000 of Bitcoin, right? So you want to have, I would say 1 to 3% is what my guys are telling me, like a small percentage in something like Bitcoin. Bitcoin is unproven. You know, it's been around for 16 years compared to gold. Gold's been around for thousands, you know, centuries. You know, it's been around forever. So that's proven. It's always worth something, right? No matter what economy, no matter what country, no matter what period of history. Yeah.
Do you remember during the State of the Market address, one of your guys said he sees more big investments moving their money away from like shares and stuff like that into tangible assets like real estate and other things like that? Do you think this is anything that has to do with that, or completely separate?
So Guillermo's saying that that he saw a lot of people, that financial advisor during the state of the market that we did, that he's seen a lot of people move away from stocks or not physical assets into real estate, into gold, into precious metals. So that could be why maybe Bitcoin has dropped. You know, I'm not sure. I think for me, like personally, what I think about Bitcoin is the biggest. I think the biggest issue would be twofold. One is if they ever find out who the Satoshi is, right? If the founder of Bitcoin ever comes out and says, "Hey, I'm the founder," then at that point, I think it tanks. You know, for sure. Yeah, you know, so it's like, if that ever happens, then I think it'll tank. And then the second thing potentially is the technology is 16 years old or whatever it is, 17 years old. So, you know, someone might come up with something better. I'm not sure, but I think the biggest issue for me is that, like, if they ever come out with like who created it, then at that point it tanks. So anyhow, I think that at the end of the day, all these work as long as you're what they call dollar cost averaging into them, right? So whenever someone comes into like a lot of money and they go, "Hey, I have $100,000. What should I do with this?" Me personally, I wouldn't just put 100,000 into the S&P 500 or to a specific stock or into gold or into Bitcoin or into anything. What I would do is I would chop it up over 6 months, right? So I would put $16,000 into the market or into whatever asset over a 6-month period. And then that way I'm buying at the high, I'm buying when it's lower, I'm buying in the middle, and I'm dollar cost averaging into it. And that's what I personally, that's like my money thing that I do is every Monday, I put money into the market. So every Monday I buy the S&P 500, no matter what. So it happens automatically. So it's like, there's no emotions. You know, the only time that I actually like go outside that box is if I see like a big dip and I get a phone call or whatever. Like I think about a year ago, I don't know if you guys remember when we were at lunch and I told you guys, "Hey, you guys have to put all your money into the S&P 500 right now. Like whatever dollar you have." Do you guys remember that?
That when Tesla was at 50%?
I don't know what Tesla was, but
It went the craziest discount ever last year.
but it was S&P was like 6,200 and then it dropped to like 4,800 and like over a period of a week, and then it was somewhere around 5. So I was telling everyone at lunch or wherever, whoever would listen to me, I'm like, go all in right now. And sure enough, within a week later, it's back at 6,000. So that was like a 20%. So if you would have put 100,000 into it, you would have been at $120,000 like a week later. So those are the only times that, you know, I personally go outside my every Monday. So every Monday I put 20% of my income into the S&P 500, a few stocks, and that's it. Does that make sense? So I think for me, if I stay consistent like that, 20 years down the road, my net worth's, you know, gonna balloon. Do you guys have any questions about those? No? Okay.
Of what you made throughout the month, or
Yeah.
20%? Okay.
So whatever, 20% of whatever I earn goes into the market every single Monday. You know, and if you guys, by the way, like a big thing that we all have to be better at is calculating our net worth. And we do it together at the office. If you guys ever want to come, we do it what day?
We're gonna do it this Friday.
This Friday. So one Friday a month, we all get together. We have our one-page form where we calculate our net worth and our budget for the month, and then we do it together as an office. And sometimes we have guests, so you guys could always come. And then I coach you on how to do it. And then that's the whole point: is you track it every single month. And if you track it every single month, over time, it'll grow. But if you're not tracking it, it's really hard for it to grow. You know. But anyways, yes.
Our income it is variable.
Yeah.
So how do you remain so consistent when some months we have big months and then the next month
Yeah.
we are
So,
poor?
good. So if you don't have a W-2 and your income isn't consistent and you have like a 1099 contracting job, like realtors or lenders or insurance brokers, then what we do is I look at my income from my profit and loss from January. So I look at, okay, we're in February right now, but I'm looking at all my income from January, and then I move it into my personal budget for February. So does that make sense? So I say, okay, well, for easy numbers, I made 10,000 in January. I'm gonna move that 10,000 into February. So 20% of that is $2,000. So that's how much I'm gonna. So what I do is 2,000 divided by 4. That's $500 every Monday. So $500 every Monday, I do it. And then if I have like a really good month in February and I make 20 grand, then the next month in March, then I calculate it and I go, okay, it's gonna be $1,000 every Monday going into the market. Does that make sense? So you want to use the previous month to project into the future. That's how you do it for people like us that, income isn't the same every month. That's a good question.
You are messing with it every month. You are messing with it because I usually have one figure, but I'm so conservative because I'm always afraid, like, what if we don't fund? And I end up underfunding. But you are missing, like every month you look at it, you go consistently and start rebalancing because the income goes like this, right?
So she's asking like, okay, well, so it's not set it and forget it. You are calculating different numbers. So the way I just told you is the way that you're supposed to. Now my time is very limited, so I don't have time to do that. So what I do is I commit to a really good number that I want to do for the year. And then I tell my financial people that. So every Monday they pull from my account and I just got to make sure money's there. Some way, somehow, some months aren't great months and I'm just like, I got to make sure that the money is there some way, somehow. So that's what I do. And I just commit to that number and every Monday they pull money from it. So sometimes I can't sleep, right? Because I'm just like, oh my gosh, they're gonna pull. I gotta figure out how to get money in that account. But it's for savings. It forces you to really, try your best and save.
You might not have some money. Like with those big companies, you can go in and adjust it.
Yeah.
And say, don't take out $800 this month. Take out $200.
Yeah.
And then you'll see another. You're gonna have a good month, and you could readjust it
I
again.
was asking him because I'm very conservative and I do the set it and forget it and every month's gonna go be the same amount. But then there's years when they're so good and you're like, oh shoot, I should have put more money. So, but he's looking ahead 1 month, but he's constantly, I'm not constantly working on it, but we should be at least looking at it every month.
Yeah.
Technically, we work on our personal budget every month. So
Right.
when we're working on the personal budget, we're touching it like that one time a month and we're counting all the income that came in. So that then you're gonna have the good idea of how much you're gonna be investing into. So if you had a great month and you got 10 checks that month, that amount is gonna be a lot higher than a month where you only had 1 check. But it's doing that personal budget every month.
Yeah. Well, and so one thing that I personally do is I'm very low on cash all the time. Like scary, I think for a lot of people, if you're not used to it, like the way I roll is, you probably have like nervous breakdowns and anxiety because my cash, like in my bank accounts, extremely low on purpose because all my money is deployed. All my money, like we talked about before, is making money babies, right? All my money is making money babies and it's just like working. Where other people like to feel the comfort and they like to see their bank account, like with thousands of dollars or whatever. And it does feel comfortable. And sometimes I miss that too, where I'm just like, oh man, like why am I living like this? Why am I stressing myself out? But for a fact, my money's always growing. It's always just, making money babies, but it is scary. And so, but that's one rule of thumb is like, don't be too heavy in cash ever, it should always be in something.
What's like the percentage you should go based off?
So he's asking what percentage should you have in cash? So I tell my clients that they should have a $25,000, reserve. Okay. Now, some people say, I used to say 3 to 6 months, whatever you feel comfortable with, of your living expenses. So part of that budgeting that we talked about is that we do every month, our family budget at the office. Like my living expenses every single month is about $12,000, right? So if I was to follow that 3 to 6 month rule, I would have $36,000 to $72,000 in cash. But I don't follow that. I'm living paycheck month to month, basically, with my cash reserves, because I try to put as much into the market as possible, and it's worked out pretty well. Okay, going into why our money always supposed to be like invested. I'll introduce Rancho Ted right now. So Rancho Ted's a sponsor. He's the one responsible for you guys drinking this coffee, this delicious coffee. So what he does for a living is he helps investors deploy capital. So he has clients that give him $1 million, $500,000, and they say, hey, Rancho Ted, give us 8% return, 10% return. So he has this money. Those guys immediately start to earn interest on it. And then his job is to go find people who need it. Real estate investors, real estate flippers, right? And so that's what he does for a living. And then he makes a percentage or a commission on the money that he's loaning out. Does that make sense? So those investors, going back to the topic, that give him money, they don't want to be in cash. They want to be in real estate notes, right? And that's what he does is, in return for the $500,000 that the investor gives him, he gives him a real estate note tied to a specific property. And then at that point, that person's happy because they're earning interest 10% on $500,000, and that's a good amount, right? $50K a year in interest. Is there anything you want to add to that?
All right, I'm on mic. I will say it's one of the safer ways you can invest money, because you got the real estate as collateral. So if you have the correct loan to value, just say a simple thing where you have $1 million property and you're at $500,000, there's no way you're going to lose your money. And just for a simple math, at 12% on $1 million, that's $10,000 a month. You'll be, on $500,000, you'll be getting $5,000 a month. Check every month, man, and that's pretty good money. So it's interest-only payments and very secure. So the terms can be 6 months, 1 year, 2 years, but you can go as little as 100,000. So if you don't have 500,000 in your pocket, you can do lower amounts, and I can talk to you about that if you ever want to do it. So fantastic way to invest money.
Cool. Yeah. So if you ever want to invest money, or if you ever want to borrow money, then you could talk to Rancho Ted. Yep. Okay, so before we go into some of these questions in here, I'm going to, yes.
Well, no, we do a lot of SEP IRAs, self-directed IRAs, and a lot of investors use that. So I don't know if before SEP IRAs where you self-employed, so you actually start an account where it's similar to the 401k, and you can't use it for anything but for investing, but you can self-direct it. So you can use it and go buy real estate with it, or you can use it and do trust deeds. That's what it is, trust deed investing. So I have a lot of investors that do that, and that's how they make their money. And they don't mind being tied up for 3 years because they don't have to do anything. The money just keeps coming in. So.
Yeah, so that's a good point. Yeah, if you don't want your money in the stock market, your IRA money, then your retirement account, you could just say, hey, I'm going to self-direct it, give it to someone like Rancho Ted, and then he'll deploy it for you, and then he'll get you a deed of trust in exchange for that. Okay, and that's earning interest all the time. Okay, before we go to the questions, I'm going to cover the 6 things that how to accumulate wealth. Okay, so the first thing always is you buy a home 3 to 5 times your income. Okay, primary home, 3 to 5 times your income. If you're making $200,000 in San Diego, it's going to be $1 million, right? So you make $200,000 gross, you buy $1 million property. Why? Because real estate in San Diego has gone up 3.1% over the last 20 plus years. So now you're just instead of renting, you're living in a home and it's growing and appreciating and all these things, okay? That's step one. Step two is you always want to have a reserve account. So $25,000, that's the rule, $25,000 in cash reserve. So after you buy your home, you want to, if you already deployed all your capital for down payment and closing costs, then you re-up to 25,000. Step three is you want to max out your 401k. So whatever your HR department tells you, whatever you could max out, then you do that every single year. That way you could, save on taxes and grow your money that way. Step four is 20% of your income goes into the S&P 500 forever. And you never cash out, just like Mauro says. He hasn't sold his stocks. He just buys them and holds them, Step five, and by the way, these steps might take you 10 to 15 years. It's not like it'll happen overnight, okay? So step five is you buy a secondary property or an investment property, or you upgrade your property. And then the first one becomes a rental. So at that point, 7 years later, that's usually the rule of thumb, 7 years, is you want to buy a second property, okay? An investment or whatever. And then you go to step six. Step six is what I told you guys earlier, where you split up the 20% into of your savings every single month. And then instead of just buying the S&P 500, then at that point you do 30% into 5 stocks that you choose, and then 70% into the S&P 500. So if you get to those 6 steps, you'll accumulate wealth long term into the millions of dollars. Depending on your income, obviously, but those are the 6 steps.
Could you repeat that last one?
Yeah.
The part when you split the 20% of savings into 30% what?
Yeah.
Exactly.
So he's asking the last step, step 6, is instead of just putting 20% into the S&P 500, what you do is you split it. Okay, so instead of all S&P 500, you distribute it 70% S&P 500 and 30% into 5 stocks, individual stocks. Any questions on that? On it's called the wealth accumulator. We're good? Cool. All right, so again, at the beginning I spoke about our first coffee and cash, the first couple coffee and cashes. The whole point was to be like an intimate community of people just talking about money, learning about money, because a lot of people, we're afraid to talk about money. It doesn't feel right. A lot of people are just like what? And a lot of times when I meet somebody, I'm like, how much money do you got? And they're like, what are you asking me, And those are just like random people. But when we sit down with our clients, every single client, that's my intake. It's like, cool, how much you have in savings, how much you have in a brokerage account, 401k, like it's an actual, like I'm finding out, And yesterday we were at a meeting and the couple that were together, they didn't know anything about each other's finances, so they're like looking at each other like, yeah, it was funny, but it's I'm trying to help them with their long-term finances, and that's why we go into all that stuff. So, anyways, I know people are weird. We get weird when we start talking about money, but that's the only way that we're actually gonna get better and grow. Okay, is by talking about it, having conversations about it. All right, so on this thing, I said there's some questions that we went around the first time Coffee and Cash, and we started asking. So what's currently your biggest asset or investment? You guys could pop, popcorn style, whatever you guys want, but mine is real estate. So I have like $9 million in investment real estate equity, okay? And it's by far the largest. I got money in all kinds of other stuff, stock market as the biggest second portion, but yeah, so my goal is, personally with that is I don't want much more real estate because I'm very heavy in real estate. That makes sense? So I want to just diversify more and grow my stock portfolio. That's what I really want, is just to grow that a lot more. And then later on, I would say 20, 30 years from now, when I want to just kind of just cruise a little bit more, then I might reach out to Rancho Ted and be like, hey, I want to start growing my deeds of trust portfolio.
I will tell you, like, the guys who own apartments forever, they've got who knows how much in apartments, and they're just tired of dealing with the renters, you know. It's like, I can't do this anymore. So what they do is sell the apartments and then start doing trust deeds, because now they have to deal with the renters. They have the money on the real estate, but all they're doing is collecting income and no headaches. Where's the rent? Or somebody complaining. So he's right. It's a good thing down the road if you want no headaches. It's a good way to do it. So.
Yeah, so that's a good point. Because 20 years ago, when I would meet these old timers that would sell their apartment complexes, and I'm looking at them like, man, you're making so much money. Why would you ever sell? And blah, blah, blah. And I'm thinking, they're crazy, you know? But now, fast forward, I'm like in their position. I'm like, oh man, this is a lot of work, you know? And now I'm like, I don't know if I want any more, you know? Yes.
I had a guy who, this guy was telling me, he got a 5-unit apartment and 2 are empty because he just doesn't want to deal with it. So he's collecting rent on 3 of them, 2 are empty. He's got enough money, he just doesn't want the hassle.
And I met a lot of people like that. And old guys that have a bunch of properties, and a lot of them are just vacant. And I'm like, hey, what's up? But they just don't want to deal with it. They just don't care. It's like, at some point, money is in everything, right? And they're just like, I'm okay having a bunch of vacancies. Yeah, it's crazy, right? It's crazy to think, but it's true. Does anyone else want to share what your biggest investments or assets are? Business? So tell us about it.
Tax firm.
So he bought into, say it loud, he bought into a tax firm. That's what he owns. So business is his biggest assets. Yeah.
Private equity, I guess, private business, and then bought in, and then just that valuation of it.
Okay, cool. So he bought into a private equity or a business, and now it's spitting off dividends, right? Yeah. So business, real estate, what else?
I see a lot of construction companies. People buy HVAC companies and their processes. So business is the one I see most often.
Yeah. So yeah, that's something that you could invest into. I personally don't. I don't invest in businesses. So there's some people like they buy businesses, HVAC companies, plumbing companies, and then they start to run those. I've never done that. I think for me, in my mind, it feels risky and it's hands-on. Because if you're not there, then it's like, you know, it's not going to run on its own. Yeah.
You're very hands-on, super aggressive.
Yeah.
You can burn money very, very.
How long have you done it?
The business, I bought into it last year.
Last year?
Yeah.
Cool. How's it going?
For double?
100%
of it, like the last time I told you.
And you're in it every day?
Every day.
Yeah.
16 hours.
Yeah.
Yeah, so.
Okay, cool.
But now I'm working on the processes. So that's the one thing. So you have to know what you're doing, have the process. If you don't have them, then you have to figure them out.
Yeah.
It's a lot of work.
Cool. Anybody else want to share what your biggest asset is? All right, next one. What's your biggest, or what's your best investment ever, and or your biggest win ever in money investing? Anybody want to share your biggest win in money? I could think of a couple. Well, one I'll share is one I bought NVIDIA some years back, and I 9 times my money in NVIDIA. And, you know, that's obviously one of the largest companies now, but back then it was like, people who knew, but like a lot of regular people didn't. I didn't know, and I just got lucky basically on that. Yes? Amazon? So you have about Amazon? Early 2000s? When it first came out? Oh shoot. What are you doing here? No, just playing. No, just playing. Yeah, that's good. Yeah, Amazon. What else? Anybody else? Early 2000s, that's crazy. Yeah, that's good.
Got lucky with Dogecoin.
What, Dogecoin?
Yeah.
So he said Dogecoin, he got lucky? Yeah, did you sell or did you keep it?
I sold.
Oh, okay, so you got lucky, like you sold it. So Dogecoin is one of those coins, cryptocurrencies that ran up for a period of time and then it dropped.
More than like 2000 turned into like 60.
Oh wow, 2000. So he said when he bought Dogecoin for $2,000, it ran up to 60,000. From 2,000 to 60,000. So
I'm out of it.
he's out of it. Yeah, that's a good. You know, got a win there. I mean, I could tell you about a bunch of real estate deals. I think for me, like, my biggest win was just buying single family homes here in San Diego and then just letting time do the rest. You know, it wasn't like when I bought them, they weren't like wins. They weren't like, oh my God, you know, I made so much of those. It was just like, dude, these are barely paying for themselves. But then I got 1 and 2 and 3 and 4 and 5 and 6 single family homes and they're just paying for themselves. But then all of a sudden time, like started just like, I'm starting to see the equity positions. I'm like, oh my gosh, this is crazy equity. And then all of a sudden it started turning into cash flow, you know, 7 to 8 years later. So that was, you know, a big win. That wasn't like it wasn't like that, right? Where you like noticed it right away. It just took many years for I to notice it.
How do you balance? Because cash flow is what you're living off of.
Yeah.
The asset side. So like you see all this equity or you have all these assets. How do you balance the cash flow need with the asset side of it? Because you said there's months where it's like, you know, you're forcing yourself to save. So how do you balance that?
So he said, you know, my properties that I owned, they were barely paying for themselves, and it's like, but I wasn't buying for cash flow. And I think in San Diego you can buy for cash flow. You're buying for like appreciation. You're buying for equity. So during that time, what should we all use to live off of? We should all use our jobs, our active income. So you have active income, then you have passive income. Okay, so this entire time, my entire career, I've been living off active income. I haven't been living off passive income because that passive income that comes from my properties or from my dividends on my stocks or whatever, I'm just throwing it back into investment. So I'm not even touching that, right? So it's almost like you hear about those football players or NBA players that said, I never touched any of my paycheck. You know, I just lived off my endorsements or whatever. So those people, I'm kind of like that. I never touch my investments. I never sell my stocks. I never cash out of properties. I just live off my active income as a realtor. So I think, you know, that's what we should do. Now, can I live off my passive income now? Yes, I can. I don't need to work at active income as a realtor anymore, but I'm still growing. I'm still trying to grow and trying to do that. I stay hungry. Yeah, for many reasons, not just for the money, but I think we're supposed to serve other people. I think we're supposed to help other people. And the only way you do that is you have active income. You know, yeah, passive income, I help people, right? We help tenants. We're remodeling a place right now with Alex, and those people are happy. Like the passive tenants income that we're receiving from the tenants, because they're like, oh my God, I love my place. It's so nice. And we're helping people there on the passive side, but you know, we're also helping people on the active side with their real estate and things of that nature. By the way, before I forget, we're doing a open house walkthrough on what day? 21st Saturday of the 27 apartment unit complex that I purchased. So on the 21st, we're doing 10 a.m. I believe. Yeah. We're doing an open house. We're gonna have coffee and some pastry, so you guys could come check out the units. My project manager, Alex, my buddy, he did a great job and it looks fantastic. So you guys are gonna be able to walk through the units, check out the property, and see what we did to it. So put that on your calendar, 21st, 10 a.m. to 12 p.m. open house. Okay, anybody want to share what's your biggest money fail? What is your, like the worst money loss that you ever did? Yeah.
Selling Costco stocks that I had to buy a car.
Oh shoot.
Don't sell. I bought in 2004, Costco stock was like $60, and I thought that, because I made like a couple, like 4,000, 5,000, and I thought, wow, I made it. I'm gonna sell to buy a car, and it was like a little car. But then Costco shot up to like $600 for $100. So.
Yeah. So her biggest money loss, she said she bought in 2004, she bought Costco for $60 a share, and then she sold it to buy a car. And now Costco right now is at $1,000 a share. So she wouldn't be here if she never sold that stock. She'd be on the island. But that's a good lesson. She said, never sell your stock. never sell your assets. Was that? She held it for a couple years before she sold it. So the lesson there is always compare any asset, whether it's real estate or stocks or whatever, to the goose who laid the golden egg, right? So it's like in that story, it's like you don't chop off its head and cook the goose, because it's producing golden eggs. You never kill the goose, and that's an asset. So you just continue just to take the eggs, the golden eggs, and then you invest those or use them for passive income or whatever, but you never kill the goose that lays the golden eggs. That makes sense. My biggest loss, I think, was
Use that as collateral, right? As well.
and you can use that as collateral. Yeah, so you can use a golden goose as collateral or a line of credit, right? Because if you have $1 million stock portfolio, like I've done, is I borrowed against it and I bought properties, right? The property that we did the deal together, I bought that one with my line of credit. So I bought it cash from my stock portfolio. I just pulled, they wired me the money, I bought the property cash, and then I resold it. So that's how I use my golden gooses.
But have you used like the life insurance part where?
I don't have life insurance. So we're gonna have if anyone knows somebody really good at life insurance that has made money and how people make money, introduce me to someone in life insurance. But I'm self-insured. You guys, introduce me. Because before, a few months ago, I never been married, never had kids. So I don't need life insurance because I passed away, and then my money's distributed. It's like no one is living off of my income, so I don't need to replace my income, right? Now I am married, and but I have enough money to where I die today, and she's set. So, but I do want to cover that topic of life insurance. And so you'll introduce me. If you guys know somebody, introduce me. So we can talk about it, so we can learn more. And then, because I don't know about it.
It's a 30-year advisor.
Oh, good. Yeah, that's good. That's what I want. My biggest fail was I bought a fourplex in the year 2010, I believe. 2010. I bought a fourplex in Golden Hill. And I lost $36,000 on that deal. And I bought it for $200,000. How do you lose money? In 2010. Yeah. So yeah, the story goes, I was prospecting. People in foreclosure, and I would do a lot of sales, a lot of foreclosure sales and a lot of short sales. Back in that era, I did a lot of them. And I met this lady, sweet little old lady, and she owned a fourplex, and she's losing it. And so I put it on the market for her for $250. We were advertising. Nobody wanted to buy it. A fourplex for $250. Nobody wanted to buy it. We kept dropping the price, and then finally we got to like 200. And I go, hey, at 200, I think I'll buy it from you. And she goes, okay. And when we were gonna go inspect the property, she goes, she told me, oh, you know what, we can't get in because XYZ reasons, the tenants, this, that. But no, like the conditions this and this, and she told me everything. I go, okay, cool, I trust you. So then I closed the deal. And then when she got me an appointment to go meet the tenants, as soon as I walked up to the doorstep, I remember seeing the sheriffs, and they're like dragging people out, and I'm like, what's going on? And it was me and my handyman, and then my handyman Jesus, I don't know if you guys know Jesus, just like a humble Mexican dude. He's like looking, and he's looking at the place, and then he goes, and then we walk inside, and it's like, it looks bad, and he goes, the price I told you? And I go, yeah. He goes, not gonna be it. And I'm like, oh my gosh, And yeah, I lost $36,000 on that deal. At that point, I just turned back to the lady and I said, hey, it was like some seller financing plus some private money. And I just cut a check. I said, here, everyone's full, everyone's whole. And I learned a lesson, an expensive lesson. And actually, the bigger lesson that I learned there was I was jaded for like a couple years. So I was scared to go back into and buy because of that. But I missed out on the best years of real estate in San Diego because I was scared because I took an L. So the bigger lesson was, even though you take an L, you got to get back in it. You can't let too much time go by.
What could you have done to make it a profitable deal?
So what I could have done
Now in hindsight.
was always look at a property before you buy it. Always look at a property. So don't take someone's word for it, even if she's a sweet little old lady. And yeah, I learned my lesson. You know, you can't trust nobody. She messed it up for how many girls after that? No. Nah, but anybody else want to share their biggest L? Yes.
For me, there was no amount, but it was 2015 when I opened up my barbershop and I was asked, why don't you invest in real estate? I think that now, 2015, I think I bought my first piece of real estate in 2021. So had I bought it in 2015, I wouldn't be here.
Yeah. Yeah, so he said that he had an opportunity to buy real estate in 2015, but he bought a business, and then it took him 6 more years to buy a piece of real estate after that, and that was a good investment for you? Yeah, great investment for you. So yeah, that's a big L. Anybody else want to share a loss? All right. The next one is, what will you invest in this year, 2026? Does anybody want to throw out anything? I mean, for me, it's going to be the stock market, and I think the stock market for me, yeah. Some ADUs as well. We're doing some ADUs, so ADUs and stock market. Anybody else got anything? Yes? If I was to buy investment properties out of state, what state would I buy? I don't know, because I would first reach out to people that own in other states. So there's a guy named Jeff that was here like a few coffee caches ago. He invests in other states. There's a guy named Rob who invests in other states that came to Coffee and Cash like last year sometime and taught us about his investments in other states. So I would reach out to people like them, investigate, and then from there pull the trigger. But I would invest somewhere where there's like a lot of businesses, like big headquarters that are there, that there's a lot of jobs basically. I'm looking for jobs, and then I'm looking for like good income, you know, in those areas. And then crime, you know, I want crime to be on the lower end. And then also I would invest in places where there's like multi-units as opposed to just single-family homes. I wouldn't invest in single-family homes anymore. I see a difference from owning single-family homes and multi-family, and I like multi-family more. But a lot of places aren't like San Diego. Like one time I tried to invest in Vegas, they don't have 4-plexes and 8-plexes and 12-plexes and 20-plexes. They don't have that in Vegas. Like there's only a few parts of town that they do, like North Vegas, but it's mostly single-family homes because it makes sense because they got so much land, so they're just putting single-family homes. Why would they do a 4-plex? Does that make sense? So I would buy in places that have like San Diego type of inventory. Yeah. Commercial. Yeah. Does anybody else have anything up your sleeve that you're going to invest in this year that's going to make you a lot of money? No? Okay, money mentor, money coaches. Does anyone have money mentors or coaches that you guys follow? Okay. All right, thank you. Besides me, is there anyone else that you guys follow, like books or mentors or podcasts or anything? What was that? No? Nobody?
I follow Dave Ramsey.
Dave Ramsey? Okay, yeah, he's good. I took his courses before at church. Yeah, so Dave Ramsey teaches not to have any debt. That's what he teaches. And but he teaches for the 99% of the people. So 99% of the people should follow his advice. No debt at all, pay off your house, pay off everything, because 99% of people aren't good with money. Right?
Isn't he the one that says you shouldn't allow them to have 20%? That's kind of crazy.
Yeah.
Like, how are you supposed to ever get in?
Yeah, so he's saying, isn't Dave Ramsey the person that says that you should have 20% to buy a house. Yeah, and he's very conservative, but again, I think he's good for 99% of the people, and he's not good for like San Diego, because no one buys in San Diego. No one could afford 20% down, right? So with that being said, I think that what he teaches is good for 99% of people, but for me, I like debt. I like mortgages because they make me a lot of money. But I don't like other type of debt. I don't like car loans. I don't like credit card debt or anything else, like, you know. But yeah. She's asking, who's my coach? Who do I follow? So I have a few money mentors. I have one of my real estate coaches. He has 120 million in the stock market. He's been investing since 1986 in the stock market. He's never missed a month. So that rule that I just taught you guys, that's his rule. He's never missed a month. I have another friend. He has probably like net worth about 300 million. And I think I told you guys his story when we talked on the passive income class, where, you know, he started off at 10,000 a month passive income, then 20,000, and then 25, and then 50, and then 100,000 a month passive income. He owns a lot of real estate. And now he's aiming for $1 million a month passive income. So, you know, I spend time with him, hang out, ask a lot of questions. But I have a solid 5 people. You know, yesterday I was talking to one of my buddies, Centimillionaire, has over $100 million. And I'm asking him about CRTs and like other stuff, you know. So I think everyone should have money mentors that have more money than them, and then just ask money questions. Yeah. Yeah.
So we need like what podcast and
She's asking about podcasts and books. What'd you say?
Your podcast is cool.
Oh, he said my podcast is cool. Yeah, look it up. I just started it. Thank you. But podcasts or books, you know, I've Robert Kiyosaki, I listened to his podcast for years, Robert Kiyosaki. There's another guy named, Jason Hartman. Jason, and then Hartman is Hartman. I listened to his podcast for years. But lately I just been listening to and reading like a lot of Bible-based podcasts and books. And those are good too, because that's where all the money lessons come from, the Bible. That's exactly where they come from. So whatever Robert Kiyosaki's regurgitating and all these other companies are regurgitating, they all come from the Bible. Like all the main stuff is from there. You know, when it comes to money lessons and how to grow your wealth and all these things. So that's kind of I've been at for the last couple of years.
Think and Grow Rich.
Think and Grow Rich is a good one. Yeah, Think and Grow Rich. That was the first one I read actually when I was 18. Yeah, that's a good one. Does anyone else have good?
Richest Man in Babylon, probably the easiest one.
Easiest read, Richest Man in Babylon. I've read that too back in the day. And I forget about these books because they've been years since I've read them, you know, but they're good. And then the last thing is, and since we're wrapping up on time, this one you guys could just talk amongst yourself or at least set it for yourself, is what's your money vision? A lot of people start to work on their money, try to grow their money, but they don't have a vision. Like, what is it? Like I told you about my buddy before, his vision was 10 grand a month net passive, and then it went to 20,000, and now it's at $1 million. Over time, over the last, many years that I've known him. So everyone should have a vision of what you want your active and or your passive income to look like. And then I did a little math formula for you guys on this thing, so you guys could figure it out. Just do the same math formula. You can figure out what your total net worth should be. My money vision right now is 100K a month net passive, not including my active income. So far I'm on that track to get there. So you guys could share that with each other. I highly recommend that you share it with your family and your friends. That way, you start talking about money. It's not scary. So that's today's Coffee and Cash. We're gonna have the next one again. My precious metal guy is coming in March. He's gonna be talking about why gold and silver has just skyrocketed, and I'm sure he'll talk about platinum or some other metals. And then the 21st, the open house at the property 27 unit apartment complex. You guys definitely should pull up to that.
Where do we get the information?
You get it from Vanessa, or if you guys signed in, if you guys haven't signed in, sign in, and then she's gonna send you guys that invite for the open house. And then, what else am I missing?
A workshop.
The workshop,
Ownership, February 29th
28th, February 28th,
at 11 a.m.
11 a.m. at our office. We have the path to home ownership. So that's like the first step out of the 6 steps I mentioned. Buy your primary residence. Bring anyone who doesn't own their primary residence, that way they can learn about it. And then if you guys, was that? Okay. And then if you guys ever have any money questions, or if you guys ever want to join our office, let us know. Okay, we're open to that. Cool. Thank you guys. Yeah, introduce me to your guy.
What?
Introduce me to your dude.
That's my mentor. That is
Oh.
the guy that taught me everything. And because I was everywhere, man. I was just, I used to be a loan officer 5 years ago. I was killing it. My biggest money mistake was blowing all that money. I was like 23, 24, just making way too much.
Yeah, yeah.
And then went to like an insurance agency, started New York, like my sons.
Yeah.
Went down, and then from there it was just a slow journey. Met him, and then I got into my business.
Introduce me.
Yeah, I'll send an email.
Yeah. Hi.
Hi, Caitlin Gray.
Oh,
I wanted
Voltaire.
introduce
Nice to
myself.
meet you.
I'm licensed for life insurance as well,
Oh, cool.
specializing in tax efficiency and things like of that nature.
Oh, nice. Okay, cool.
Also a military veteran.
Oh, dope.
I had my real estate license and was in real estate for a few years. But,
Oh.
transitioned into financial management.
Oh, dope,
And
dope.
Happy to share my business card with you.
Yeah, please.
I
How
could-
did you hear about us?